Good morning and welcome to Economy and Markets and Business Day TV, where we give you a comprehensive breakdown of the economy as well as the market. The last time we were here, we talked about the Trump's threat and its potential implication on Nigeria's market. It's been 2 days now, and we've seen some really huge hits. First of all, in the bond market, Nigeria's Eurobonds have been tanking. We've seen yields on Nigeria's bonds soar, especially when placed among peer Eurobonds. Then we've also seen in the capital market, in the stock market, basically, we've lost over a percentage of value. We've seen 3 trillion in actual market value, market capitalization lost. It's having its effect on our markets. The whole incident has had its effect on our market. Today we are going deeper into the issue. We are taking it from an economic standpoint, and on the conversation, to lead us into the conversation, we have Anieka Joseph, who is the MD and CEO of Convo Africa. Good morning, Mr. Anieka.
Good morning. Great to be here. Thank you
Yeah.
very much.
Okay. So the last time you were here, we were on a different trajectory. This trajectory is quite a different one. I think this is probably the first time a U.S. government will make such a threat to Nigeria as a whole. What's your take on it?
Well, first you have to admit that we live in unique political times.
Yeah.
The international politics, as we used to know it, which used to be essentially a bipolar world order, has now become a multipolar world order. Secondly, globalization has created an opportunity, for instance, where a dominant idea is perpetuated across the world, irrespective of culture, religion, etc. And it is within this context that we are having this conversation. And an attempt to oversimplify will not do justice to the audience that we seek to educate and hopefully inform.
So one question I have is around all of this and Nigeria's standing in, especially when it comes to regional diplomacy in Africa. Back in the past, Nigeria used to have a leading role in the continent. We saw Nigeria from the 1960s, Nigeria went into Congo, Kinshasa, to help settle conflict in East Africa. Then in the 1980s, we saw Nigeria go into Liberia at some point. We went into, through ECOMOG, went into Sierra Leone in 2000s. We went into Sierra Leone again. Nigeria has always had this big brother stand in the continent. Whenever issues came up in the past, Nigeria was like a go-to country for world powers to come to and say, let's sort this out. But now we are finding ourselves in it's a different state. How do you think this affects Nigeria's standing as a regional diplomacy powerhouse and also as a global investment powerhouse?
That's a complicated question, David, but I thank you for asking.
Okay.
I think we lived in simpler times then.
Okay.
If you remember, the backdrop with which Nigeria took those actions was a military government. In the military, you do not have the complexity of civilian existence that befuddles and beclouds government. You do not have very many political considerations to take care of when you want to design a policy or take a policy position. In those times, the Nigerian military, whose priority was to maintain a state called Nigeria through the barrel of the gun, nobody was coming to say, well, I'm Muslim or Christian or minority or majority. Once you see the barrel of the gun, you pipe down and the government will do what it wants. As the country evolved and power got to the people, literally, you find people who will now color power from their different perspectives. And this creates a scenario where you have many other nuanced interests to manage and to deal with. And you can understand why it appears that the military does not also have that energy to really focus in addressing what we'll call domestic or international threats. Because even all of that political nuance has found way into the disciplined organization that we consider the military. And one may conclude that because of all those considerations, even the military itself is a victim of our version of democracy. Now, how then does that affect the way we are perceived internationally? Because of the very many colors of problems we have to now manage internally, our position to have really simple approach, and I use the word simple with the utmost regard, to issues of stability, instability, peace, progress, and the way we would typically react to it has also been affected. While we went across the continent ensuring that rights were protected, we didn't have to worry about that locally because we had the barrel of the gun sort that out for us. However, now we can't talk too much about what's going on elsewhere because we are honestly, frankly overwhelmed by the complexity of the nature of our democracy.
Okay. One question I have is around Nigeria's response on this matter diplomatically. We've not seen any significant response. We've seen the Minister of Foreign Affairs talk. I think he's presently in Germany. We've seen the presidency release some statement. We've not heard the president speak. But let me provide some bit of context. Now we are seeing our bond yields in the Eurobond market tank, or basically spike. That's leading to like higher borrowing costs for the country. We already know that to finance the 2026 budget, Nigeria was targeting a sovereign sukuk. They were planning to list a sovereign sukuk in the international bond market. They were also targeting listing the issuance of another Eurobond, and all of this comes up. Whether we like it or not, it's going to have its impact. It's just a threat. There's not been any actual intervention. They've not taken any policy steps, and just by a basic post on social media, we're already seeing all of this. We're already seeing some of the boomerangs on our economy. What do you think the Nigerian government can do diplomatically to probably rein this in so that it would not have much of the economic effect it's already having? It's not affecting the average man, but if it goes on like this, it would affect the average man. So what do you think the government can do to rein this in?
Good question, David. I have to start by saying that this is a self-inflicted injury. Foreign policy was not a priority to this government for whatever reason. And now it is scrambling to come up with a foreign policy position because there is interest from the United States on the civil liberties of Nigerians in Nigeria. The second error that is also foundational is the fact that somehow in this country, the concept of human rights is not fully understood, including by civil society, the judiciary, and religious organizations. Talk less of politicians and government. When you combine the fact that we take for granted the lives and liberties of individuals in Nigeria as people, and we do the same collectively as a government, and then you pair that with the lack of foreign policy strategy, you can tell quickly that this was a disaster waiting to happen. And all of these things come together to create the perfect mixture of the chaos that it seems that we are managing at the moment. How does that affect us? You remember that we live in an interconnected world, that different countries have different bilateral relationships that have indirect or direct consequences on other bilateral or even multilateral relations. If I am a country that has gone into an agreement with the US, and perhaps that agreement includes that we will not provide financing for nations that have been declared countries of particular concern. The moment the US creates or announces that designation, to honor my agreement with the US that has nothing to do with Nigeria, I may be obliged then to begin to take steps to withdraw any financial commitments to a nation that may have been designated with the CPC. And because we understand the strategic position that the US occupies globally, either from energy to technology to finance to security and the military, many nations likely have this relationship with the US. And Nigeria, while could be a strategic nation, is not a nation that many people depend on to that extent that they may be willing to jeopardize an existing relationship with the US. So you can be sure that nations within the European Union who are significantly connected to the US through NATO and several other trade policy and international political policies are going to take proactive steps, simple common sense steps to ensure, for instance, that they do not complicate their relationships with the United States. And finally, then for us, what must we do? As we will have to quickly figure out who the most competent, most connected, most influential people that we can identify and deploy them to the top 5 or 7 regional powers so that we can begin to receive information. Let people tell us what they may be concerned about before it gets to the level where the tweet of the President of the United States has brought us to today.
Now, you've mentioned something around Nigeria. You've talked about regional powers and the third party effect of Nigeria's designation as a country of particular concern. One of the
Correct.
things that has kind of turned the tide on this particular issue is the response of the Chinese government on the matter. So a lot of Nigerians have been on they've known a lot of sentiment, especially seen on social media. People have talked about resources, the US is after our resources. Then China steps into the play and says they are all for the US respecting the sovereignty of other countries and all and all. And now people are like, does it complicate the matter? Does it implicate us further in this matter, or does it make it a more murky water for us? Is it a good help? Is it a good thing China has done for us, or is something that would probably make the matter more complicated than it should be?
The only thing that can make this more complicated is our response to it.
Okay.
China, if anyone understands international politics and diplomacy, you know that China has been in a similar situation with the US, with the Uyghur Muslims.
Yeah.
China has been accused of human rights violations with the Uyghur Muslims in China. So they know what it means. However, because China is an economic superpower, an emerging military superpower, they have the ability to manage the consequences of those types of conversations because they are critical to global trade, whether you like it or not. Number two, China also has a reputation for not being a bastion or the biggest voice when it comes to human rights. So, when a nation that takes human rights the way America takes it speaks about the alleged human rights violations in Nigeria, and a nation that is not particularly known for its human rights coming to defend you, you have to be very careful which position you take. Because either way, you are likely to answer serious questions around your stance or your position on the subject of human rights. So it is in Nigeria's best interest to allow China to speak as a sovereign nation. You know, sovereignty is a word that we have heard a lot recently, but sovereignty is an interesting subject matter that if it comes up, we'll address. But for us, it is not complicated depending on how we respond. And if we respond in a way that is backed with proper understanding of our global politics, proper understanding of what our development depends on, then we may complicate a simple matter just by the way we respond.
Now, I want to shift to reform. Under this president, we've had it's been reform after reform, from petroleum subsidy to tax reforms, and it's been one reform to the naira stability and banking reforms. And how would a geopolitical shock of this magnitude disrupt that trajectory? And do you think it has the capacity to influence foreign investor sentiment about Nigeria?
David, we've always had foreign investment in Nigeria.
Yes.
Depending on what they believe they could gain. Even when there was war in Sierra Leone or Liberia, Firestone was looking for a way to continue to extract rubber from Liberia when Charles Taylor's militia had invaded the nation. If you have the right incentive, investors will remove their suits, put on bulletproof vests and helmets, and come and seek for profit in your nation.
Okay.
That said, because there are other nations that investors can easily migrate to, you now need to bend over backwards to make it easy for investors to show up. One way that you can do that is perhaps some of your laws around labor. You can go into interest rates from a monetary policy perspective. If there are going to be some international and domestic collaboration and monies to be borrowed, how much will it take for monies to be paid back? And most importantly, judicial reforms. Do we have a criminal justice system that is competent, seen to be competent, and able to deliver justice within reasonable time? If you can take the issue of justice quickly, be able to make sure the justice is seen as independent, devoid of the influence from politicians, that the Central Bank of Nigeria is taking empirical decisions based on the science of economics, not influenced by politicians, you are going to find people who are coming in. If you made strategic investments in agriculture, energy, oil and gas, human resource, arts and culture, etc., you would find that people would take steps in spite of the issues that may exist to continue to invest. But we must remember that we exist in a competitive global economy. And what you think you can offer, another nation may be able to offer with better terms. And that's where being competitive is critical. And if we cannot deal with some of the, in my perspective, rather primary issues within our nation, it is clear that we may not be sophisticated enough to address the complex issues around being globally competitive.
So what you said now is bringing me is leading me to remember the situation of the early 2000s, the late 1990s, with the Niger Delta militants blowing up oil pipelines, gas pipelines. And yet, during all of this period was one of the periods where Nigeria achieved its highest oil
The highest.
production ever. We hit
Right.
3 million barrels per
Right.
day. Like what you said, around the investors will basically take off their suits and put on bulletproof vests.
Yes.
They will get dirty. They will get their hands dirty. Shell will come up with conflict resolution methods. They will start to meet with the chiefs that they thought they could not meet with, and all like that. It's also making me remember Russia, the Russia-Ukraine crisis, and everybody thought, oh, nobody will do business with Russia anymore. Europe will no longer buy gas from Russia. They blew up Nord Stream 1 and started buying with oil vessels, with tanker ships.
Yes.
So all of those things is making me really look at it. Do we have any competitive advantage that really makes, at this point we're in? So a lot of people have been on social media. Many people have been talking about, oh, there's a target for our oil and all like that. Some people said Dangote refinery. And I looked at it. I said, in the early 2000s, I don't know if America had as much oil production as we have, but right now America is the world's largest producer of oil, producing more oil than Russia and Saudi Arabia combined. They refine 13 million barrels of oil per day. They have a refining capacity that is almost 20 times our refining capacity. I'm looking at all of this. I was also telling someone that Nigeria's largest trading partners, we make up like 1% or 2% of their total trading volume. We are in a state where, is there anything that really makes us like, let's see whether we can look at the bright side that makes us really, as competitive as we believe we are in our minds. A lot of Nigerians feel like, we're that big country that, we can really disrupt the global trading system. Is there anything of such? Can you recollect anything of such?
To be honest, David, by default, Nigerians typically have an inflated opinion of themselves, collectively and individually. And usually it is not grounded in any facts, but there's nothing wrong in having a healthy self-esteem.
Yeah.
I'll put it that way. Secondly, when people make the argument, for instance, that America may be after some of our resources, there's nothing empirically speaking that suggests, for instance, that America needs Nigeria, except in one area: Nigerians themselves. The most significant resource that Nigeria has is Nigerians. If you look at the number of Nigerians as of 2024 that had moved, the data as at 2024, we're talking about almost 450,000 Nigerians that were born in Nigeria that had moved to the US. Of that 450,000 Nigerians, another 280 had become citizens of the United States. And another 80,000 or so have permanent residencies, or they have their green cards, you can say. And because intellectually Nigerians have a unique ability, you may find that these guys can end up in governments, offices, departments, agencies. And if for any reason a state of insecurity back in Nigeria, maybe the loved one of a Nigerian in an American government office has been kidnapped, that Nigerian would be compromised because of a dirty situation back home. And nations that are proactive understand that a country that has this much intellectual capital that we have recognized and we have integrated into our nation, we now need to take steps to ensure that these guys that we have integrated into our nation do not turn around to become a risk to our nation in the case that there is blackmail because a family member has been kidnapped, etc. Secondly, terrorism has become a global phenomenon. And if we do not nip it in the bud, people who think that they are in Australia or the United Kingdom or the US or even in Asia doing well may find themselves in a really tricky situation if an uncontrolled security situation back home is not put under control.
Okay. Thank you so much for your time. That's all we can take on this part of the show. Thank you so much, Mr. Niek and Joseph.
Thank you very much, David. It's always a pleasure.
Thank you. After the break, we return with news headlines making the rounds and market updates from yesterday. Stay with us. Welcome back to Economy and Market. And now here are some of the business news making the headline. We see Bonny Light has jumped to over $78 per barrel, outperforming the global benchmarks WTI and Brent. Bonny Light, which is Nigeria's own crude oil variant, is currently trading at $78.62 per barrel, outperforming some of the world's major benchmarks such as Brent crude and West Texas Intermediate, that's WTI. Brent is hovering around $64.53 and WTI is hovering at $60 per barrel. This is showing a real demand, a global demand for that Nigerian variant of crude. The grade had ended the previous session at $66, but has now surged past its October peak of $75 per barrel. The rebound follows upbeat remarks by Donald Trump on renewed trade talks with China, easing fears over global economic growth. Meanwhile, we saw WTI rise by 0.6% to $60.5 per barrel and Brent gaining 0.8% to $65 per barrel, although the two of them are below Bonny Light's price. According to the United States Energy Information Administration, U.S. crude inventories fell by nearly 7 million barrels, thus signaling tighter supplies and stronger demand. In Nigeria, production dipped to 1.39 million barrels per day in September. This is following a strike by Pengasan, though Bonny Light's rally offers a short-term boost to earnings if output remains stable. Now we look at Nigeria's Eurobond market that has continued to tumble after Trump's threat. Nigeria's Eurobond market is witnessing heavy sell-offs. That's from yesterday as investors are reacting to the US President Donald Trump's threat of military action if Nigeria's government fails to halt the killing of Christians by Islamic militants. The average yield on all Fed 14 FGN Eurobonds fell to 8.17% from 8.28% yesterday. According to Gbolahan Ologunro, the portfolio manager at FBN Quest, the sell-offs are driven by heightened political risk, profit-taking, and broader risk-off sentiment among international investors. Trump's comment over the weekend sparked global concern after he said the US military could deploy troops or carry out airstrikes in Nigeria. Ologunro noted that Nigerian Eurobonds often move in sync with the US stock market, which also saw losses as investors worried about overstretched valuation. Despite recent bullish momentum following the Trump-China trade deal and the 25 basis point US rate cut, analysts say that current risk sentiment is discouraging new Eurobond issuance. Then we'll come back to Nigeria, where Nimet International Pharmaceuticals has posted a 5 billion naira revenue in the third quarter of 2025. Nimet International recorded a strong performance in the third quarter of 2025, with its sales revenue rising by 62% to 5.01 billion, a reflection of the expansion of its business activities. Key figures from the company's 9-month reports shows that it achieved a 71% growth in gross profit to 2.49 billion naira, while its operating profit jumped by 120% to 1.66 billion naira. The company managed its cost effectively as marketing and distribution expenses rose only 6%, while administrative costs grew by 67%, driven by inflation. However, a 198% increase in finance cost to 1.3 billion weighed on earnings, leaving its net profit just marginally up to 339 million naira. The group's total assets jumped to 13.35 billion, with its net assets improving to 1.99 billion naira. The company generated a positive operating cash flow of 1.5 billion, with its earnings per share rising to 7.95 kobo from 7.27 kobo last year. Then we'll look at Helios, which is eyeing a full exit from Excella. Africa's largest private equity firm, Helios Investment Partners, has announced plans to fully exit Excella, which is Nigeria's largest private gas infrastructure company. The firm, as Helios, confirmed it had agreed to sell its remaining 75% stake in Excella, ending its nearly decade-long involvement in the country's natural gas distribution sector. The co-founder and managing partner of Helios, Tope Lawani, revealed the development in an interview with Bloomberg TV, describing the move as strategic rather than performance-driven. He said that Helios was proud of the investment, adding that it had created a real champion in the gas infrastructure space. Excella, which is formerly known as Oando Gas and Power, was founded in 2001, and it became a standalone entity in 2004. Helios took a majority stake in this company in 2016, and in 2019 it became the sole owner. The divestment follows Helios' earlier sale of 25% to Japan's Sojitz Corporation in 2022, marking a new chapter for one of West Africa's most strategic energy assets. After the break, we return with market updates from yesterday. Stay with us. Welcome back to Economy and Market. From yesterday's trading data, we've been seeing a significant wipe-off of value. Yesterday, we saw the market dip by 0.72%, losing over 1,109 points as the All-Share Index closed at 152,629.61 points. Year to date, the market is still solid, 48.29% gain. Year to date, the best performance of the market since 2020. In total traded volumes saw 683.9 million shares in deals worth around 20.375 billion naira. Market cap is at 96.971 trillion naira. Now let's look at the top gainers of the day. Amongst our top gainers, we see Unicell Interlinked 10%, 10 full bullish run, 10% gain to now hit a share price of 64 naira 90 kobo. Suno Assurances up by 9.98% to hit a share price of 4 naira 96 kobo. Honeywell Flour up by 9.72% to now close at a share price of 19 naira 75 kobo. Livestock Feeds gained 7.25% to close at 7 naira 40 kobo. Then the Initiates PLC up by 4.17% to close at a share price of 12 naira 50 kobo. Now let's look at our top losers of the day. Number one was Dangote's salt company, that's Nascon, down by the maximum 10% to close at 99 naira per share. Skyway Aviation Holding down by the maximum 10% to close at 89 naira 55 kobo. Oando also a downer on the market. There was significant loss in value in Oando, 9.99%, as it closed at the share price of 43 naira 25 kobo. Oando this year has been one of the NGX's top losers. UPDC down 9.92% to close at the share price of 5 naira 54 kobo. Then Len Africa down 9.86% to close at the share price of 5 naira 85 kobo. Our most actively traded stocks on the market, let's look at them. ASO Savings and Loans, 111.95 million shares in deals worth about 115.22 million naira. FCMB was also a significant trader of the day, 110 million shares in deals worth around 1.135 billion naira. They will move to Fidelity Bank that saw 55 million shares traded in deals worth of about over 1 billion naira. Zenith Bank, 38.276 million shares in deals worth over 2.3 billion naira. First Hold Co., the holding company of First Bank, 29.8 million shares in deals worth over 929 million naira. We go to the global market. Yesterday was bearish on all sides. It was a bearish market. From the US, we see Dow Jones down 53 basis points to close at 47,000 points. We see S&P also down, significant losses, significant declines recorded. This is despite a 25 basis point rate cut. There's been a lot of bullish momentum in the US market. However, yesterday was quite a surprise. We saw significant value wiped off, despite the fact that there is a US-China trade deal, and there was also a rate cut. We saw decline, serious decline in the market. This is basically down to profit taking in that market, as well as investors being wary of overstretched valuation. In Nasdaq, we saw a 2% decline, a whole 2% decline, with the Nasdaq Composite down to 23,000 points. Now let's move to the Asian market. The Asian market was not different. It was reddish. It was reddish, bearish across all the board in Asia, from Japan to Korea. That's the Kospi index down by almost 2.4%. Then to Hang Seng index down by 0.79%. That's the Hong Kong Stock Exchange index. Now in Europe, it was a different ball game. It was a mixed sentiment in Europe. We saw the FTSE 100, that's the benchmark index for the London Stock Exchange, slightly up by 14 basis points. However, in France and in Germany, it was a bearish game also. Down by 52 basis points. The CAC 40 down 52 basis points. DAX index down 76 basis points. And that's all we can take on economy and market for this morning. Thank you for staying with us. I'm David Olujimi.
Okay, so how do you feel about